Hello, good morning, good morning. Man, look at this little liquidity grab currently happening on Goldie. London open liquidity grab. Just took out these highs. Yeah, I'm currently still looking for some sells. You know, I think maybe some sells are going to be good. Maybe some kind of a sell over here. No. Liquidity grab, price is coming down. Daily right now is down 0.40%. So, you know, it's looking pretty good. Pretty good for some sell ideas. It's funny because I think a lot of people are still expecting gold to go up today. It's like the bias today. We want price on gold to go up, but it's moving downtown. We get some sell continuations here. Stop loss above here, but let's see. Alright, so gold, you're moving way too quick. What the hell is this? What the hell is this? You're moving way too quick. We have some clean range there on the left-hand side. I want to wait for a support to first be formed here. If I can get a support being formed here, then you know, I think that it will be a good idea for some sells. Oh, you're in sells already. Nice. Let me see if I get a bit more structure here, and then I'm going to be looking for some sell continuations. I wouldn't want it to just break like this, but we have such clean range on the left-hand side. Look at this thing. How is it breaking so fast, gold? What's going on here? London Open just decided to melt today? There are a lot of people trying to buy gold because of the FOMC, and they're getting like kind of a surprise here today. So my entries are going to be at the break of those lows, anticipating that we can continue to move down bearish. So that's going to be the idea over here. We have a pretty tight stop loss around, you know, like 26.8 pips. Well, let's see if we can get a re-break of these lows. Break these lows and get a sell. Where Woods nowadays? Not sure. Maybe the man's working. Or maybe he's locked in. Locked in the shadows, putting in the work. The man you become is made at times nobody sees. It's the 15-minute entry shotgun swing. Oh, nice. Yeah, it is. We got some... Man, look at this range here to the downside. It could just be selling off today. See this? Sign of break below support area over here. We're already down in the daily 0.43%. We could be pricing in, you know, like we were seeing like some profit taking from the market. Maybe people are liquidating positions to get in some buys, and it's causing some kind of like small, kind of a big retracement here. Look at that. Oh man, this daily candle looks like it can just dump. Because, you know, a lot of people will be expecting gold to move up today. So seeing it already start to move down like this, yeah, it's quite interesting. See how that hourly looks? Yeah, hourly is still fresh. Hourly is still fresh. It hasn't had much of a move in it. Sure, it pushed down like 50 pips, but it's still fresh. It's kind of like small body over here in terms of like the amount of volume that's inside of it.
We don't do that.
Your most consistent trader out there, man. Big ups, Vic. Thank you. Thank you. Hey, what's in the chat? But my bro is visiting, so I'm only on the charts when we having rest periods. Ah, I see. Oh yeah, that's true. Your brother was on stream yesterday, you said, or he was watching the stream with you. Your bro. Oh, I guess your friend or your actual brother. Where's Architect? Maybe he too is somewhere here, lurking in the shadows. Got a lot of lurkers here. Yeah, we got a lot of lurkers on the stream because sometimes we get, you know, like 300 viewers and it's all just, you know, the same people who are just commenting. But the rest of them, like, I think, what is it? Like a 20-30% maybe are interacting and the rest are just lurking. Got some lurkers. But yeah, we're waiting for price to break below support over here. Then I think I can get a sell. I'm not looking for any buys here at the moment though. I'm mostly looking for some sell confirmations because if you look at the way price has been behaving, it's been moving down today. You know, it's been moving down. Yesterday we had a bit of accumulation. Basically, yesterday's PA was moving sideways. So no real direction on yesterday's PA, and today's PA is bearish. So I think that's it. I want to see if London can give me this continuation to the downside. I believe we have this nice little range. It's a shotgun play on the 1 hour time frame. Just broke below hourly support, starting to slightly break below previous hourly lows. So that could be like a shotgun entry here as price was breaking below support to continue to move down. There's so much room there, especially if you're thinking of like a higher time frame trade. I mean, look at the 4 hour. 4 hour is starting to break below here too. I think there's a high probability, the way that 4 hour is set up right now, that it could close below that support. You know, but we just got the London session open up, so it's good that I'm not yet in these sells. Because price just came down so aggressively that it didn't even make any sense. Now it looks like a bit of a fake out for anybody who must have gotten in early. Because it's just going straight bullish. Look at this. Straight bullish candles. So I think a re-break of those lows would confirm the direction a bit more. We should already have taken the trade on gold sell. Yeah, I already did. I already took one this morning. Actually, if I held the trade, man, you'd be in some really nice blues. Hey, Benedict, good morning. Angie, good morning. Ricardo. This was a, what is this? I took such a good buy yesterday on NY, so clean 1 minute. Yeah, this looks very nice. Very nice consolidation. price even came down, retraced, did like a small little reversal, potential reversal confirmation right there too, to continue moving out bullish. Awesome. As soon as you take a trade, they're gonna come. That's true. What time did I enter? I got in like at a 1:20 a.m. Eastern. Remember, I always post it on my spreadsheet here in the description box. And also, if you go on the Discord, you can also see on the Discord the position. They also had nice range. Oh, price is coming down. We had nice range on the left-hand side for price to continue filling down towards that support after getting our entries. You know, something we talk about a lot. Yeah, so if we re-break these lows, I'm expecting price to continue pushing down bearish, guys. Especially because it already broke the lows once over here. It has no business coming back to re-break the lows if it doesn't want to continue pushing down bearish.
On that beat, going crazy.
Yeah, looks slowly coming in. See if I'm gonna get triggered. Yeah, Vigor, the reason my buy became Judas, you call Bogdanov on me? Careful with the buys as price is coming like this. Very cautious with those buys. Because everybody's got the same idea today. We got FOMC statement today. Everybody is going to be looking to buy gold. I'm sure people were holding buy since the Asia session. That's why, you know, we're going to do what the market is telling us. What we see, not what we feel. Yeah, well, can we dump it? How big my stop? About 74. Okay, awesome. Could be one of those days where price just melts, you know, it just keeps bleeding and bleeding and bleeding. And you're just wondering, when is it going to stop? Just got a new 5-minute candle open. Looks like slightly closed below that support area, at least on my broker. Hope we close this 5-minute support. Gambling it, feeling like this today. What'd you gamble? can't look at that right now. I need to execute. Look how close that any 1 minute candle right now could just dump. It could just dump like literally any minute right now. Here it comes. I just want to get stuck in so I can chill. Once I get stuck in, the rest of it is pretty much straightforward. Oh, you're so close, Goldie. You're so close. Are we in? Okay, nice. Yeah, we're in. I'm in. So I'm expecting this thing to just continue moving down bearish. I'm not expecting, like, you see what it's doing right now? Stuff like this. Yeah, I don't want to deal with that too much. Because see how the 5 minute is? I don't want to see the 5 minute reflip and then come back into that range. That's what I'm going to close. That's what I'm going to manage my trade. Because you see right here, we've already broken below support. We should respect this support area and price should just continue to push down bearish. See, I think it makes sense. We also got a shotgun entry there on the 5 minute candle. So notice how the 5 minute candlestick has broken below support. This next candle here has created a top wick already and it's starting to break below these lows. So I don't see a reason now why to pull back up there. Because if we start pulling back up there, there's a probability that price ranges. There's a probability that price ranges for London session as we come towards a pre-NY, NY time. But what I want to see is a dump. I just want to see it follow through. I want to see price move directionally. Come on, Bogdanov, dump it. Just hold on, we're going home. Let's get it. Let's get it. Time for sell. Let's go. You think it can go that much lower? It is not oversold? No. The market is never oversold. It's never overbought. It can move way longer than you think it can. Even right now, this could be even conservative for the market. 74 pip right here. Like, price can still move past that level and just keep moving down. You know, that's the thing about the market. It's it kind of breaks expectations. So if I see prices moving down, then I'm just gonna, I'm just gonna go with it. Why would I take a buy? You know, it's like, why would I take a buy now? Why? If it buys, it buys. But how would I know that price is gonna buy when price has been coming down this whole time since the Asia session? Like, how would I know that price was gonna buy? And how would I know anywhere else over here that price was gonna buy? You know, as price is coming down. So I think if you're just looking at the chart for what it is, it's literally moving down today. You know, until otherwise, maybe until we saw, you see, like right now it's struggling. That's not a good sign. The way it's struggling here at entries, usually your best trades don't struggle this much. But until it actually starts to give us like some kind of more structures to the upside, I'm still thinking it's a sell. Come on, Goldie, stop struggling so much. You also got the next 5-minute candle close below support again. Got a tiny bottom wick there to break. This 5 minutes still doesn't have a bottom wick to break. It's pulling up there, no bottom wick. New to the channel, let's hustle. Welcome, welcome, Lee. It looks like a fake out on the 5 minute. The way the 5 minute right now is trying to break the previous 5 minute highs. But we just gotta wait and see. If it can just take out the previous 5 minute highs and then drop down. But yeah, right now it is looking like it's trying to fake out back above this zone. You see, that's what the candlesticks are thinking right now. Thinking, oh, you know, we got some sell orders down over here. Maybe we can pull it up. So we gotta see if the buyers actually come into the market, if they're gonna be strong right now. Because, you know, we're still predominantly bearish. So sometimes it could happen where it just grabs the order above this 5 minute like this, like it just wicks above, and then slight weekly above, and then starts to drop like this. And then that zone over there, you're gonna see in hindsight gets respected. But if it starts pulling back deeper than that, then that's when I'm going to manage my risk. Because usually good trades don't pull back like this. See, now we want to see if that's going to be that liquidity grab right there. See what I was talking about? So now that's what we just got to wait and see. As a market, as the story unfolds over here, that's what we're just reading candle to candle. Because remember, every moment in the market is unique. So for right now, that's looking good pulling down. It would be even amazing if this thing could reflip. Because it still doesn't have a bottom wick on the 5 minute. So you know that same trade that we got into, it's not the same trade as price progresses. You know, so you have to look at what's currently happening that can, you know, change the variables. So 1 minute, 20 seconds here. Do you think we will see all-time highs today? Right now we are down, but I wouldn't put it out of question for all-time highs. Now, we'll see. You know, it's like the market sometimes surprises people. You know, we're expecting 100% rate cuts to the dollar. Then gold should actually move up. But you see, right now, price is moving down. So it's kind of doing the opposite. So it could be a real sharky day today. If you're going in a bit aggressive. It would have been a lot more straightforward. If price was already moving up on gold, man, those are like no-brainer buys. You know, because it's going to be like in line with everything that we're going to be expecting. Ready for the drop? Yeah, I'm already ready. But this thing is giving PA here a bit of a hard time, you see. It's trying to get back above that level. You see what it's doing right here, chat? It's giving like a small reversal hint. It's like a small reversal hint. So I still got to hold until my levels there get broken. How's that 4 hour looking? 4 hour came down. Ready. Would be nice if we had a new 4 hour, but still good. Got a new 5 minute candlestick that just opened up here. Created like some kind of a support. See, that's what we're trying to avoid, chat. Like, trust me, you're going to look back in hindsight and say, oh yeah, I think it was a good idea to manage risk here by 35% drawdown. That's if it continues to move up bullish. Because they're going to look back at it in hindsight if it continues to move up bullish. Because we're always thinking about losing in trading. Remember, the best loser wins. Right? So if you look back at it and you see something like this, there's a high probability at that point then something like that would happen. And, you know, instead of losing like, you know, 74 pips, you only lose about, you know, like 28 pips. So we got to see this area over here still get respected. Come on, dump it, Goldie. See 1 minute again. Oof. We need to get out of this zone. We really need to get out of this zone. Because the longer it stays here, the stronger the position for the buyers becomes. Because now it's going to start barcoding a bit more. It's going to be that more of that reversal like this. Come on, someone just hit sell. Someone drop 1,000 lots. 1,000 lots on gold sell right now, just to get us out of that zone. Because it's building confluence for the buyers. Come on, let's break the lows, Goldie. Come on now. Break the low. So a tiny accumulation over there. With a nice sign to say break the lows. At least confirm direction. Confirm a bit of direction over here. So a small little tiny accumulation. Because the idea is whatever side that it breaks should be the side that it goes. Either breaks above and it goes up or breaks below and it goes down. So just for the variables, it would be good for it to at least first break the lows. You see that? It's so close to breaking it, but it's not. It's like literally flirting with that area. Look how close it is. It came how many pips? Like about 0.5 pips. And someone just needed to drop a few lots over here and then drop it. Oh, Goldie, come on now. Let's get that variable. Yes. Okay, there you go. Told you. At least now the sellers have gotten a bit of steam, a bit of points. You know, trading is like a point game. It's like, it doesn't mean that it should just go down 100%, but it's like a point game. So, you know, like when you watch sports on TV, right now the sellers just got a point. You know, it doesn't mean that they're going to win the game, right? But that's a point. That's a point in the right direction. All right, let's go, baby. Now you're ready. Let's get out of this zone. Let's get out of that zone. Wick break, super important. If buyers lose 36.70, it will melt to 36.55. Oh yeah, look at this. Now you see the sellers. That's why I'm saying that was a pretty important area over there. So let's see now if we can get the follow through. Was that 30-minute close coming up, top wick, and then it will drop? 30-minute? Oh, 30-minute closure. Oh, nice. Yeah, 30 minutes about to close here. Drop it like it's hot. Drop it like it's hot. Ooh, man, beautiful. Yeah, I got that 30 minutes about to close there. $30 minutes about to close. So close. Let me see something here. Yeah, I think I'm going to put my stop loss here to break even, guys. I'm going to make this a risk-free trade. See if I can survive top wick on that 30 to continue pushing down. But risk-free trade, risk-free trade. Yeah, now the 30 gonna create a top wick over here. Just push down about 31 pips. Pretty big push, 31 pips. 31 pips, pretty big push. I took 400. Nice. Yeah, I would love to see it just continue down. Hey, good morning, Jay. It's got a lot of room there to keep pushing as well. 30-minute clean traffic, higher time frames, all clean ranges. The only thing I would say is that the 4 hour is a bit like it's a little big of a candlestick. It's a little bit big of a candle over there. So that's why I'm just being a little bit cautious. So already dropped down like 120 pips on that 4 hour. Top wick has been now formed. So you can get a lovely push over here. No. It shouldn't really, it really shouldn't at this point also come all the way up and re-break the highs. That's the thing. That's the idea here for the way price should move. If it has enough steam to keep going, like it shouldn't come, you see, it's like it shouldn't come and re-break the highs because it already created a top wick and then it started re-breaking lows again. Yeah, it might be losing steam there because there was already a pretty big push, man. Like 30 pips. 30 pips are pretty big. No. Just let your area insecure. What you mean? What you mean, Willis? FOMC today? Yes, sir. FOMC today. We're all just kind of wondering when gold is gonna go up. You know, it's just moving down for now, but maybe it moves up like during pre-New York. Maybe NY. Oh, maybe NY. Maybe NY it moves up. Like, but FOMC is coming out much later into the day. You know, that's the thing. So markets can be right now. We're definitely trending bearish, but it will be quite interesting to see what happens as the day unfolds. Oh, yeah, I just got taken out of break even. GG chat. Pretty good push. If you manage to secure something, you know, awesome. Awesome. Good for you. Still up for the day here. Yeah, so now we see. At least, you know, you give yourself a chance to catch the move, and if it plays out, if it continues to move, you know, it's none of my business here at this point, because we should have seen with the London Open a much cleaner follow through, but I think it makes sense. A 4 hour is quite big already. So, you know, like it would be nice to see like something like this happen. You see how that previous 4 hour candlestick pushed like 300 pips? It would be nice. Like theoretically, it could do it. It could do it, but yeah, now we just gotta wait and see. It's bouncing off the EMA 21. Yeah, I got stopped out on my B with small profit. Awesome. Let me see what shot this was. You felt like gambling today. What was this though? You took a sell earlier. I did like 0.4%, but that's me. I close early so many times. If the stop loss was tighter, it would be like a pretty decent push. You know, this 1 minute candlestick here alone did 30 pips. Literally just 1 minute candle. It's kind of a similar thing like what happened yesterday, you know. But oh man, this entry confirmation. You remember I was talking about this accumulation that was right here? Man, I think, you know, that's what's played out. That's what's played out. Because look at how tight their stop losses are. Just above this area here, about like 15 pips. And then that's basically a 1 to 2.5 risk to reward. So that's how I was saying, like, this is an important area. Because I knew it. I knew once it started breaking, it's confirming some kind of a signal. So it's kind of layered. You see, all this kind of like, if you can have a layered approach to markets, I think it's pretty good. Because, you know, first we have our initial position from this much larger zone. And then there's also those smaller positions happening on the LTF. So you see how the variables play out? Like, this is still a valid trade, the one we took. But this one also just had that higher probability of it playing out amidst the much bigger setup that we had. So you see how like fractal markets are? And you're gonna read those in like a laboratory kind of setting over here, where it's like you're just experimenting with that sample, and then you're seeing, like, you make sense of those. You know, as candlesticks print, they can only print so many candles, so there's only so much concepts that you could feed into that section of PA, you know. So if you're looking for a breakout here, boom boom, there's only so much you can fit into this area. If you got a good foundation, then yeah, I think you're gonna know how to approach that without overcomplicating it. But I imagine for somebody new on the stream and someone who doesn't fully understand TFX concepts, then yeah, for sure it's gonna sound a bit confusing. But that's why it's important to stick with a system, you know, so you know the ins and outs of that system. The more you know your system, the more confidence you get in it, and the more you understand the markets. Can you trade NAS now, or is spread too high? No, I don't trade NAS. I don't trade NAS. Let's see what that 1 hour candle is doing. The 1 hour candle was still fresh though. Like, it could theoretically still continue to move down. But, you know, just let the market come to you. Like, if you ever watch those Nat Geo Wild documentaries, you know how the crocodile is always waiting for the gazelle. The crocodile's got to stay in the water, you know. It's got to let the gazelle come to him. So we're like the crocodile here. You got to let the market come to you, and then you take your trade. Because if the crocodile gets out of the water, he's not going to catch the gazelle. So you gotta let it come to you. There's no play all algorithms. Yeah, I mean, sure. Sure, there's algorithms. Why not? There's algorithms, there's traders. But in the end, the market dictates where it wants to go. So if it wants to go down, it'll go down. If it wants to go up, it'll go up. But today, sharks are around and ready to eat. Yeah, today's a tough one. Today's a tough one. Like, we're all just like crocodiles in the water, trying to catch these gazelles, but they kind of elusive here. Kind of elusive. You're gonna catch a bit of it. So you caught a bit of it here. Whether we catch the full extension, that's a different story. Because I didn't want to see this retracement here first. That's why I said it could still drop. It could still drop in. Because the market usually has this habit. It has this habit as well of getting close to areas that you want to secure. Retraces up. Kind of like shake people out. And then all of a sudden it does this. Then you wonder to yourself, why could it not move an extra 5 pips, but it can move a 50 pip in the opposite direction? And then to come back later for that extra 5 pip, even 1 pip. So it's a habit as well. It's a habit. So that's why, you know, the best thing you can do is kind of like just manage your risk. And have the easy trades just come to you. But yeah, here definitely the smaller consolidation here played out. First, I think that's what it possibly was that also caused that retracement too. It's like this profit taking from this area and then price to come up like this. Remember, like trading is super competitive. So if you're going to get really good at reading candlesticks, you know, you can take advantage of such situations like that. Because you know what else you could have done here? Instead of risking, let me see if I can. Instead of risking, initially was stop loss was where above here, 74 pips. Imagine this. You, instead of risking 74 pips, now you're risking, oh, look at that. Now you're risking 18 pips. And then you can even scale into a position like this and still keep the same risk that you would even if you're planning on managing risk at a 35% over here, because we wouldn't let the full 70 hit. You understand? So like you could still look to manage the risk, like in a sense to keep it low and still scale into this position. And then, you know, you can kind of maximize gains off your trade like this and keep the risk the same. But man, doing those calculations, like I know these things happen over and over. We teach them in the bootcamp as well when we get the simulations and we have those opportunities. But I typically don't like to overcomplicate that much. I kind of like a little bit more simplified way of trading, but that is definitely an option. And just understanding that already helps me understand the flow of price action better. Inverse head and shoulder in the 1 minute. It's kind of forming now, inverted head and shoulder. Yeah, exactly. Chat, did what I say make sense? Did it make sense? Write a 1 if it made sense. Write a 2 if you're still confused. Let me see what y'all think. Because that's my outlook on markets, correct? Like we all have our own outlook on markets. That makes sense to you? Or is it a bit confusing? If the interest rate gets cut, which is probably will cut, but is exactly expected, will price move much? Yeah, definitely. Man, price is gonna move crazy today. It's gonna move really good today. Price is gonna move really good today. So much volume that's due to come in. All right, so are we getting some engagements here? You got this is what I mean, like literally 20% of people are engaging with the stream. Like 311 people here and only 2 people left a response. But I understand. It's probably a busy day out there for some of y'all. Busy at work. Just listening to the pod. Maybe some of y'all are asleep right now. You know, sweet dreams. Sweet dreams. Hold rate cuts be priced in. Yeah, definitely. Like that's why I think price is already down so much. Because price is, it's most likely, and that's why I'm very cautious about this trade. That's why I put to break even, because it's like, when are the buys coming in? Because, you know, fundamentally, we're expecting buys on gold. But technically, we're getting something different. It's a whole different thing technically. So I can't trade my feeling. I can only trade what the chart presents to me, correct? So I'm still also a bit cautious about when these buys are coming in. See my potential liquidity grab right over here too. Because it's down like 50%, you know, like a 50% discount. 50% discount is pretty good. 1% most of the time is like, 1% is like the day is most likely going to close bearish. Correct? But now we're down 50%. And we're expecting buys on gold later. So it's a discount. I guess you can think of like 50% discount. Pretty good, right? 50% discount. If you're expecting the prices to go up. I always engage because you always respond. Most streamers don't. Keep up the good work. Yeah, thank you, Tuber. I try and read all the comments. I'm at work, can't touch. Chat. Chitty chat. Yeah, this is you see now it's like this it's acting very like basically what I think it is, it's this move here is done and it's setting up against something. So you can't beat around the bush too much over here because this is all choppiness. It's setting up something again. Another way I like to look at markets sometimes also, like you see how our initial entry still gives some drawdown before going in our direction. It could have even been a situation where that initial entry got X'd, but I don't think it really gets X'd. I think it's still in play in the overall time frame. But if we're just open to new modes of understanding markets, because look, nobody knows 100% how candlesticks move. No, not ICT, definitely not that guy. Nobody actually knows. Like, you know what I mean? If people actually knew, you'd already have hedge funds which were like uber successful, uber rich, you know, basically taking over the world type shit. But that's why you got to be open to different perspectives of markets. You understand? So like you get, once you have that ability to be very objective, like in any good science experiment, then you kind of like learn all the different probabilities of certain things happening. So sometimes you can see even like this previous setup could have gotten X'd when this next one was set up. So that's the one that played out. You see, so that one now became the main one. This one didn't become the main one anymore. So this one became the main one. Because remember what I said about risk management. People can be really quick on managing risk, you know, and see these opportunities. Same ones we talk about as well. This is nothing new. We've broken this down in the simulations before. And I also spoke about it live while it was happening. How there was some entry confirmations coming in here. And then that sometimes maybe we can X this move. So then that's the one that plays out. So you still get the push, but it happened on like a different scale of PA. So that's also another perspective of thinking about it. Because this is something that I know happens. Especially when the stop loss is pretty big. Hey there, you need of any editor? No, but on WOP you can join the clip. I have a clip channel on WOP you can join. You just post some clips on there and you get paid. You just gotta search it on WOP. TetraFX. Pre-NY already pricing in to go up if wanted to go up. See, like right now, for example, it's setting up again. It's in another setup phase. So maybe we're going to see price has not yet had a full-on move, generally speaking. It has these smaller moves, but it hasn't had a full-on move, generally speaking. So it's still kind of like setting up in this area. So this is still somewhat of a point A, waiting for distribution. Either maybe it continues to move down or maybe it starts to move up. But you see, the train has not yet left the station. Remember, drink more water, chat. You know what's interesting as well? It hasn't taken out those previous sellers up here. It's still respecting these highs or where the distribution came from. It came pretty close though. So A is a no trade zone. Yeah, A is like A is basically, yeah, it's like a no trade zone. Or that's like when the trade, this is where the trade should come out from. Right here. So you need to get like confirmations by wick breaks. Either breaks the highs or breaks the lows. That's how you typically be looking at that scenario. So it needs to get out of this zone. See, it's the same thing that happened up here. It got out of the zone, did a break and retest off the 5-minute. Remember, we were monitoring the 5-minute too. seeing how the other time frames were behaving. Remember, like I said, sometimes it can also take out the previous 5-minute highs and then dump. It's exactly what we saw here too. Take out the previous 5-minute highs, respected the support, and then price dumped. So you see, like everything was already premeditated based off of experience. And the more you watch the candles and the way candles behave, you kind of get better at this anticipation. And get really good at anticipating what the market is going to do next. Remember, just like yesterday's trade, price came down and then we anticipated that fake out, reversal, and then for price to continue moving upwards. You get really good at doing that. But you gotta first have like a good foundation, a solid foundation of reading candles, like candlestick behavior. This is actually what candlestick reading is all about. You know, when you put things like that. For me, I don't believe FVGs and that stuff is really understanding candles, because what essentially you're doing is you're taking gaps from a wick here to another wick here, and then you call that a fair value gap. You know, it's like you're kind of making a sauce. You're making a sauce without the main ingredients. You know, you got some ingredients in there, but you don't got the full-on ingredients that you need, the foundation, a good foundation. That's what that is. Because you're not actually reading candles. You're not actually understanding how candles behave and, you know, that sort of thing. It's different. It's more of like a strategy. Right? It's more of like a strategy, but anyway, that's just my opinion. Not a popular opinion, because the cult following of that strategy is pretty big. So, you know, what can you do? Can't do anything. I can only give my advice and my perspective, and, you know, those who are willing to look at it from a different angle, maybe they're going to benefit from it. Let's see. Discover macro maps, your new way to explore the global economy. Yeah, this is pretty nice. That was a new update. New update here on TradingView. We got macro maps. So you can come on here. You can look at Russia GDP. Look at the interest rates. So you got Russia interest rate over here. Then you got a bunch of other stuff. Let's see. Government, fiscal expenditure, government revenues, tax revenue, businesses. Oh, business climate indicator. Oh, we only have data for Canada and France. The housing market over here. Oh, let's see this. New residential sales. Let's go into emerging markets. What is new oh, it's not giving us data. We need data of emerging markets. Building permits. 30-year mortgage rate. Construction spending. Yeah, it doesn't have all the data, unfortunately. Man, if it did, that would be awesome. You know, this would be like some kind of Bloomberg terminal here now. If we had all data for all these countries. And it's like helped you with your investments. None of this is investing advice. Small disclaimer, this is just educational purposes only. It's getting tricky. If now goes up, can get a good break with SMA Confluence. Right now it's playing yeah, it's still moving down, you know. That's the thing. It's like price has not yet broken any key levels of structure, but I think what's happening, the volume is kind of it's dying out slowly. But it's still on its way down. It didn't even break above these highs. See, we're still down here, 0.56%. Where to get this? If you click on the here, you see this little box thing, this white circle, you're gonna have this. You're gonna get news flow. Look, you got a bunch of stuff on here. I think I'm the only streamer who actually uses Telegram news feeds, like the Telegram features. You know, like we're always looking at these fundamentals beautifully laid out for you. And you also got some other stuff here. News feed. What's this? News flow. Oh yeah, this is a full feed. These are all the fundamentals you can look at. You know, you can come on here, market insights for crypto. Then you can read a bunch of stuff. You know, as you're waiting for your trade here, where you've been a crocodile, waiting for your setup, you can just read a bunch of fundamentals here. What is this? Yield curve. Correlations. Anybody who likes correlations? You got a yield curve. We don't use that. See options. Ooh. Wow, what is this? Win rate 33.99%. Strategy builder. New hourly in 1 hour? Sorry, new hourly in 1 hour. Oh, you mean, yeah, you got new hourly open here in the next like 2 minutes. Gamma's ATC, pretty handy stuff. Got it. 4 minutes? 1 hourly candle every hour. Yeah. Look at this. Man, and now it moves down? God damn you, Goldie. Why did we have to retrace those so much? Could have just kept pushing anyway. Hourly was still moving down, so... Could have just moved without giving us that retracement, Goldie. But that's the market for you. You know, it's much harder for people to make money if it retraces. So the whole idea behind the market is to not make it easy for you. It will make it easy sometimes, but in the long run, it kind of like pushes you to tilt. It wants you to tilt. That's the idea, because like a lot of new traders will know how to navigate this situation of profitable trades coming into break even, and you can get quite a bit confused when you don't really understand your system. It's still building, and the market does that a lot. So it kind of like has these little tricks that you kind of learn down the line that it does. Then you're gonna stop playing the victim and just move over to the next trade. So you take one trade, you move over to the next trade. Do you use a funded account? No, sir. We're probably heading down to 45 to 50 pre-FOMC. This range is huge. We just got this, 30-minute over here. Look at it. Barely went anywhere, that's 30-minute. It just went up for a deep retracement. That's all it did. Deep retracement and barely didn't go anywhere. It's like showing you low volume on the 30-minute. You see the way it's closing right now? It's like a doji candle. Doji candle signifies indecision in the market. It signifies like low volume in the market. So it doesn't mean 100% that the next candle can't just dump. But that's what the candlestick is at least showing us for now. There's some kind of like a low volume here. Let's see, it closed like a doji. But yeah, this is a range. You're talking about a 45.50. 45.50, it's pretty good. 45.50. 45.50. It's such a big range though. I don't like trading these ranges because they're super obvious, They're so obvious that everybody is looking for this. Everyone's looking for this range to get filled. But so far it's moved quite nice. It hasn't been so choppy. But yeah, everybody's looking for this range here to get filled. That's the idea. That's a push from yesterday's New York. No, this was, when is this? Monday. Oh yeah, Monday price moved up. Correcting some of Monday's move. So it's got that bullish exuberance. It might have been like one last push, right? Before FOMC came in. Like big money getting in. One last push, right? That exuberance wave for FOMC. And then it was like profit taking. Now they're taking their profits out the market. So it's like they knew that they were still waiting, but there was an opportunity for one last push. Because maybe there's a lot of volatility in the market they could use to make that happen. And then now they're just securing. So it was a quick grab before FOMC, and then pricing back into the, I guess, normal price. It should have been anyway, somewhere around here. You can think about it that way too. because they don't really use risk to reward when these moves are happening like that. This could even be a negative risk to reward just to make this whole move. But you're still making money. You know why? Because they're managing risk. They got risk management models. That's like you've seen on the stream and I've been explaining to you on the stream, that you can be very dynamic with the way you look at your risk. Right? So just because it's negative RR doesn't mean that you're letting your full stop loss hit. So you're finding ways to balance that. So they do it at such a high sophistication that a retail trader, your brain cannot keep up. You can't keep up. There's a lot more calculations that need to be done. Like when you start competing at their levels. You know, so man, look at this now. Prices oh man, now price is coming down. Oh, that would have been nice. That would have been my area to secure something there. That would have been my area to secure something. I knew price was moving down. But look at this. It just had to come up. Then move down. The drop is insane. And it's still dropping. Imagine, people are still buying gold, expecting it to move up for FOMC. And they're trading what they feel and not what they see. It really did not take out those sellers though. It still respected their highs. It's quite interesting by 36.71. So you see what I meant here, Jay? Like this was a point A. That was the point A region. That was telling you like this is where price is coming out from. So it just needed to break those wicks. It needed to get out of this zone. So you see now that's the distribution. So this was like the bus stop right here. There's like orders get picked up, all aboard. And then now that's what she's saying is distribution. So these guys getting paid out. This guy's getting paid out right here. So there's a lot more variables in play that also made the first position retrace so much. Remember we spoke about the mini trade that happened here. So there was a few other variables that ended up making this trade finish early, and then it came back up to set up again, and then it got the continuation. So instead of like playing the victim and saying, oh, you know, I got stopped out and price went in my direction, you could flip that switch and then look at it from a different perspective. Because the world is not always out to get you, you know. Maybe God is just giving you a chance to build your character. Oh, you gotta buy here. PA, your strategy works on every pair. Just got a German 40. Oh, nice. Yeah, it is. As long as they all move like... As long as markets accumulate, then... And even clean ranges, I work pretty well. Missed out was German 40. I will try catch the knife. That's at 3662/3661. Just create a new lower low on the daily, I think, yeah. What did we hit? 0.62? Price is still coming down. My sellers trailed, already made 1% for that. Nice one, nice one. Like, if you think about it this way, if you still wanted to hold the trade, let's say you say, screw it, I'm holding this trade, I feel really good about this trade. The risk to reward was really nice because initially, this was going to be the stop right over here. Correct? So instead of 74 pips, stop would have been 28 pips. Yeah, but now since the market gave you more structure to use, could have used the highs right over here because we can see this is already an entry point, the accumulation reversal. So man, you really start to cut down your risk by a lot, you know. So you can be more flexible because you can change the risk, but the take profit can remain the same. So you can only control this based off how you're seeing that the market is moving. You know, so I think that's a good thing. Even if you just left it up here, I think it would still be fine. That would have already pushed down a 1 to 1.21. The way is respecting that SMA. It can even use, let's say, close above. Are you thinking a bounce towards the VWAP? My long from...
We don't do that here.
My long from the NY session yesterday. Who's this? Ruben. NY session long rejection at support, SMA confluence, RSI confluence, fake out confluence, break of the previous highs. Oh yeah, I think this is on the 1 minute. Fake outs towards the lows for price to re-break. You know, the good thing here is that you waited. This is a good thing about this trade. You waited for price to get out of this range, so it was gonna come to you over here to break these highs to confirm your direction. Yeah, it's always important to wait for price to come to you. First trade of the day. Shotgun from 1 minute. Waited for bottom wick to be formed and enter a flip. Confluence RSI oversold SMA. Nice, nice. First trade of the day. Consolidation plus fake out in the 1 minute. SL to BE. Vision slash fake out. SL to BE 50 pips. Easy and simple trade if just follow our trading plan. You got liquidity grab towards the lows and break of the consolidation. Nice. Yeah, I gotta see the 1 minute there. But on the 5 minute, it does look like you have like a bit of accumulation here. On the 5 minute, then for price to break above to keep moving up bullish. You got that liquidity spike right below it as well. Yeah, clean. Very nice. If you see that on the 5 minute and you're getting execution on the 1 minute over there, it's a pretty good entry. Because you also got, I think this is a consolidation. You know why? Because that's a doji. This is a doji candle in the 5 minutes. So for me, that looks like the 1 minute may potentially have been ranging as well if it closes like a doji. Doji closure. I'm out 1% for me today. Awesome. TP1 hit dubs. I'm still in. Was that went from negative 5% on my funded to 2%. Oh, nice. Yeah, pretty strong directional bias. See that 4 hour slowly but surely coming down. Like the daily time frame as well. I think what it is, it's profit taking. That's why we're seeing this kind of volume come in here today. It's profit taking of this higher time frame pushes. Man, question is whether this daily can still reflip. I mean, like, if we see price just melt, it's gonna be quite surprising. Because, you know, it's already moved up so much. Like, look at the way people would have already been keyed in the positions from such a long time ago. You know, the thing is that retail mindset is always late to the party. Because most retailers don't do due diligence. They don't do enough due diligence. Like, a lot of people who claim to trade smart money, they never do any due diligence. Like, at least from my experience, when I was still learning trading and I was part of these communities, people who claim to trade smart money, they never did anything more than just put like some kind of lines on the chart. you know, and like spill a small narrative about it from somewhere they pulled out of their ass. But nobody actually like looks at the, like really breaks down the fundamental work for you, and then looks at the chart and then makes sense of everything for you. You know, like for example, this is when Powell was speaking. That's when the rally started. And we're already heavily expecting rate cuts. We're seeing the tensions between Trump and Powell. Like these were bound to be coming in. And Powell confirmed that on Friday the 22nd. And you know, like smart money just plays it like this. Most of the time, retail traders are late to the party. Just like any kind of scheduled fundamental you see on the Forex Factory. That's why all this is like gambling. The NFP, the core CPI data. Because you don't truly understand it, you know. You just try and get lucky because it gives you enough volatility that maybe you can pass a challenge, or you can get an easy 100 pips, 50 pips. But that can also go against you, you know. But that's what people do mainly just to get quick money. So it's like pure gambling. But if you look at the macros, you could see like, damn, everybody's expecting FOMC today and US dollar rate cuts. But the price has already been priced in. It's already been priced in. So we want to see it move up, but I would not be surprised to see it sell too. You know, imagine the amount of liquidity of the people looking for buys, and then you just take the opposite side of the trade. Because you need buyers. If you want to push price down, you need buyers in the market. So if the market makers have that ability to push it down, they could squeeze most of the buyers out. Yeah, that's a lot of mathematics though. But you know, at the same time, it's already put up. It's already priced in. The move could already have happened here, but let's see what happens, chat. You know, with news, it's always kind of like interesting. That's why I say, if you're not able to do due diligence and lock yourself into these positions at an earlier stage, you know, we've been talking about this for such a long time too, then you might as well just not trade the news as a whole. And that's what I do. I just try to avoid the news as a whole and just wait for technical confirmations. Remember last rate cut, it moved like 500 pips up, then consolidate on the top and correct the whole move down. Oh yeah, I remember that. Damn, yeah, price moved up so much, so aggressively, and then that's when the revenge traders came in. Revenge traders came in, and then they got lucky enough to catch the sell. Well, price to correct that move. I saw one trader do that, and I'm like, man, this guy is just gambling. Not gonna mention any names. Dude. Let's see. Gold slips ahead of FOMC decision. Gold fell to 36.80 per ounce on Wednesday, likely on profit taking. Yeah, that's why I said even without looking at it. After metal notched a fresh record in previous session and tested the 37. Yeah, by the way, we hit 3,700 yesterday. Those targets were met. Someone in the chat mentioned it. If you watch the reel that was posted yesterday, you're gonna see that comment. Gold going to 3,700, and then look at this, 3,700. $3,700 psychological mark. That was you know, because we took the buys yesterday. This is where we took the buys here yesterday. Where was it? Somewhere around here. Oh, where was it? Here? Let's go. Kill zones. Yeah, it was right here. We took the buys here. And then price. Let's see what happened. New York came down. Oh, it came down to take these lows. And then it moved to 700. 3,700. So it's like almost like the market has a memory. Because that's how it's like a really nice confirmations over here. It's almost like the market has a memory. It comes down. Make sure to retake all those orders over here. Make sure it gets everybody. And then it moves to the target. Then it moves to, that's for if you're like, you know, holding. If you're holding and, you know, people are quite greedy in the market as well. They could not secure or manage their trade even for something like 5 extra pips that would allow everything to go back into drawdown. I used to do that myself. I used to do that, chat. Like I would have trades the whole day I'm in profit and it would start reversing on me by London close. I'm in drawdown and it's already hitting my stop loss. So I know this. Bro, 67.20. Oh, and still coming down. Damn. It's still coming down. How low can you go? Need some John Wicks up in here. It's just coming down. There's no like, there's nothing on the higher time frames. You're just seeing bearish candles. You got some nice shotguns on the 15. Got one shotgun here. You got another shotgun here. And you got another one right here. So it's just creating supports, closing below support, and then breaking. Creating support, closing below support, and then breaking. Go on the hourly. Man, hourly, super clean range. Maybe the only thing you're going to talk about here is if you're really looking for a zone to react off of, you're probably going to start looking at these areas right over here on the left-hand side. So you got this zone and you got these other zones. So that's the only thing that you can now say to yourself, that we can maybe have a reaction off of these levels. But in essence, like, it can just push because you got all this clean candles here. So it's just like a correction for price to move down. You know, it's just a much bigger correction. But if you look at the trade that we took as well this morning, it was the same idea anyway. You know, we had range here on the left-hand side. Price came, it corrected it after breaking this support. So that's what PA is doing right now, but on like a much larger scale, right? But like the bigger the scale, also the much harder it is to fulfill that promise of making it come all the way down towards that support. But the idea is like at least some of this range will get filled up. You know, so that's how you kind of like thinking about the direction price can potentially head. You know, where's the area of like least resistance that price can travel towards? Then you're going to find your clean candles. So that's again what we're seeing happening right over there. Only until maybe like we start to break some key levels, then you maybe see like a little bit more bullish price action. Like key resistance will be this resistance here by 36.71. You know, if candles can start to make its way up here like this, break, retest, respect, create new higher highs. But until then, just stick to your sell biases, guys. Like, the markets can move a lot further than you think, so don't listen to that RSI. RSI has probably been saying oversold since the London opened. Remember last rate cuts? Yeah, oh yeah, we read that. Is it your actual room behind you or is it green screen? Yeah, imagine this, man. Imagine this with my actual room. Have you ever seen a room like that, looking like a room like this in real life? Pretty sick. Pretty sick. You have? This looks like world domination right here. You take over the world in this room. Looks like Iron Man's room. Tony Stark. Oh, you can build this room? I pimp houses? Oh, since you pimp houses, you know what people are commenting on this video? They were wondering how does a Batman build his lair without anybody noticing? Like, who builds for him all of this? You know, does he build everything himself? Bruce Wayne. So sick. Man, if you pimp houses, I want this. I want every day the same outfit that I wear on stream. This black t-shirt and this black hat, and then it just comes out the floor like this. Oh man, that would be awesome. What a way to start the day. The Batman. Yeah, it's a Batman outfit. Yeah, all right. So price, you know, not much to say about price. Just trickling on down. Moment of silence for people still trying to buy gold. Jeez, look at that candle. Don't feel FOMO though. Don't feel FOMO. He'll eventually stop and give options again. The only way you can cash his continuations is on the 1 minute. Because you don't have any structure to really play off of. Unless you're just using the most recent supports which are being formed, and break of support, sell. Candle close, break of previous low, sell. It's like a 5 minute. Put a 0.01 out for me, lads. Forming another accumulation right here. Or starting to at least. Stops on 62. As please 12 more pips down so I can enter. Yeah, y'all are the ones making these small candles here. This little pushes down and then in and out, in and out. Price pushes down. Small retracement and then out of the market. Because you see, it's a perfect way to explain to you the psychology of buyers and sellers. Because you know, the buyers here, they know what they're doing. As you're taking this like counter trends, you know what you're doing. So you don't have as much confidence as the sellers do. That's why you see these buy extensions, they're pretty small. Because it's like, who do you think will win this fight overall? You know, sure, you can get small buy, but you know the sells are the ones which are really the ones that are playing out. So why not take the sell? If you're gonna just gamble and buy anywhere, why not just take the one that's in the direction of where price is going? Wait for price to move up. So instead of looking for the buy, just flip that. Flip that like this and then look for the sell. You got a chance of at least getting a runner. I don't know why people do that all the time. They're always trying to do the opposite. Wyckoff about to enter the chart. It's like the feeling of getting away with a risky trade is even better than just taking a good trade that's in line with the trend. That's the feeling that we're kind of chasing more, because it doesn't feel good to be disciplined. You know, being disciplined is boring. It's like if you win a disciplined trade, it's like you're kind of expecting that, you know, in a sense. But when you win a gambling trade, oh man, you feel good. You start getting that dopamine in your brain, the serotonin starts to come in, and you feel like really good. That's why people do that. Even they know they're doing the wrong thing, but they still do it. Why did you not re-enter? Because I stick to one trade a session. You know, if my trade gives me a hard time, then I just move to the next session. And it just keeps me stress-free. It keeps the stress away. So, you know, trading, man, trading in reality for me is maybe about an hour long. An hour long that I'm on the charts for each session, and then, you know, I'm done for the day. So I think that's the most stress-free way. I've been trading. Look at how many trades that I take. In a month here, I can take like 30, 35 trades. You know, 1 to 3 trades per day. Stress-free. One trade per session. It adds up. I'm up 230% on the year. It adds up. Like, it's still a lot of trades if you look at it as a whole. Like this September, I'm already taking 30 trades. Man, crazy. I didn't even know this. I've already taken 30 trades. Holy. You see what I mean? And I'm disciplined. I only take 1 or 3 trades a day. Now imagine some of you guys. Imagine now when you start journaling your trades, how many trades you're going to see you've been taking. How many trades you take? You know, some of you take like 5 trades a day, 7 trades a day. Man, when you start actually journaling, you might even get a heart attack. You got to realize like you're taking way too many trades. I've taken only 30 trades with discipline this month so far. And we still got about 2 more weeks roughly like this. You know, it's a lot. It's a lot. You're only going to see those habits when you start looking for them. If you don't look at them, then you're not going to see them. It's like the ostrich effect. You've ever heard of the ostrich effect? It's like we spoke about this briefly yesterday, but it's when you go out with your mates and you overspend money, you don't want to look at your bank account because you know, like when you're spending money, you don't want to look at your bank account because you know what you're going to see. So it's like an ostrich effect. I think that's what it's called. Something like that. So it's like, you know you're over trading, you know you're breaking rules, so you don't even want to start to journal because you know you don't want to confront yourself with that data. But you got to do it. You got to have those hard conversations. The worst thing that you can do for yourself is open a business and not keep track record of your business. You know, your broker doesn't do it for you. It's the same way as saying, I don't need a budget because the bank, like I have my money in a bank. Your money's in a bank, but it's all together. It's all lumped up in one. You know, maybe you got a savings account, but it's all lumped up in one. So you can't really differentiate between different sections where your money is supposed to go unless you actually start to budget. But the only solution to that is if you have like a very good, a very, very good performance that you're making more than your lifestyle is catching up to how much you're making, then maybe you know you could get away with it. So you're making a lot of money, but your lifestyle is remaining the same. That's why I don't go off and buy the new iPhone all the time. You know, iPhone 17. If you go look at the stores, this is an iPhone 16e. But that's just proofing it a bit for the next 5 years. But I don't just go and buy the new phones. If you go look at the launch of the iPhone 17, there's actually less people this time than usual. Because it's, you know, we already know iPhone does this bullshit. Like it makes the smallest of upgrades and it doesn't make sense for you. You know, so people are slowly catching on to that as well now. But like if you just keep your lifestyle the same and then you don't need to budget because you're going to be making more money. But what happens to a lot of traders, and you've seen it for yourselves. If you go on social media, you've seen these guys buying Bugattis. You've seen them buying these expensive cars. Trust me, these guys' finances are not in order. I can guarantee you that they're not in order. Those cars are very expensive. They're liabilities at the end of the day. They cost a lot of money. And at the same time, they're not showing you like properties. They're not showing you like proper investments they're making in the real world. So it looks good, but trust me, like that money goes so fast. In trading, when you start making money, it's going to be coming in and out. That's how it's going to be for you when you first start becoming profitable. It's just going to be like a very bad habit. It'll come into the account. It'll leave the account. So you got to be careful. Got to be really careful. I almost fell into that trap. You know, I almost fell into that trap. And the bad thing about that trap is it makes your trading even worse. Because eventually, you know, the ego comes in. Eventually, you need to like trade more to meet certain bills now because you've gotten like more bills to pay. Your lifestyle is going up. Serious trap, chat. That's why you can become a profitable trader, but No one ever teaches you how to manage the money. Vic, I deleted the 8 and 50 SMA. You can download it in the description box. How the F do I put it back? Just go onto your indicators over here. And then you should be able to find it on TradingView. Or just click on the link again. Where is it? Yeah, you can come here, just click on the link again and then put it back. I definitely have this ostrich effect. Because, you know, it's not enough to just be a good trader, chat. It's never enough. You have to be a good overall accountant of sorts, especially when you're dealing with finances so closely like this. You know, your first step is just to get good at the skill. That's why I always like to use famous people as examples. They're the best examples to use because they have the talent. So I imagine a famous person is just a profitable trader. They have the talent, they have the skills to make the money, but they always go broke in the end. So what's the point? That's the point, because you never learn how to actually keep the money. Keeping the money is the hardest part. Making it is easy. Keeping those payouts that you make, that's the hardest part. Keeping your money. Because everything is designed to take it from you. Can a car be motivation? Yeah, why not? If you spend more, you make more. Yeah, it's like Conor McGregor. You know, Conor McGregor says, I got a nasty habit of spending money, but I also got a nasty habit of making money, with his Irish accent. Conor McGregor. Yeah, but okay, I mean, like, if you look at Floyd Mayweather recently is going bankrupt. You know, Floyd Mayweather, the money team, because he made some really bad decisions. And that's typically what happens to ultra successful people who never learned about money. They make so much of it. You know, Floyd Mayweather, always on a private jet, yacht, nice cars, always flexing watches and so much money spread out. But they always kind of end the same way. So yeah, chat, profitability is just the first step. Keeping it, definitely going to be a lot harder. Yeah, exactly. Not like, yeah, I agree. That's the hardest part. Not like donating back to the market all the time. And that's why you don't overtrade. Because, you know, if you overtrade an area, it's like you're going to donate back to the market. When you overtrade, let's say you take this sell over here, and then that sell now becomes like a losing trade. That next trade that you're going to take in this short time span, that revenge trade that you're taking, is basically a donation more than a disciplined approach to markets. Some people like to do like a second chance. You can give trades a second chance, but only if you have like some good experience. You've been trading for a long time, so you already know how your profitability looks like month to month, year to year. You know, but for most novice traders, what they're trying to do a lot of the time is like impulse entries and revenge trades, and that's like you kind of donating, paying higher tuition fees. I want to master how to get how to get dopamine in a loss. You get excited? Man, I used to get excited. I used to get dopamine in losses. You know, because I bought these magic keys. Because, you know, at some point, man, I was losing so much. I was like, damn, I gotta find a way to manage my risk. So I look at this thing and I was thinking to myself, like, it's pretty good for gamifying the process of managing your risk. You know, so I used to get excited to push that button, get into drawdown, and cause like close partial. They would make that noise, ding, or something. You know, they like partial, close partial. Where's that close partial? Close full, close half. Was it close half? Yeah, you could close like partials over here, and then every time it would be like exciting feeling. But you know, it's a good thing because it gets the conversation started for you psychologically to start controlling risk better. Show on camera. I have it in the other room. I swear I used that thing for a month only and I stopped using it. But it was just good to build a small habit around managing risk. That's all it's good for. Wait, let me actually see some. See, this is it right here. Still in that box and everything. Still in the box, still got the card. Is anything, any information on here? No, nothing. Yeah, you can't even see it on camera. This thing is basically brand new. I barely use this thing. Yeah, it's a I think it's the first version as well. These magic keys. Who has these things? Anybody in the chat? Anybody uses these? So you like just go close half. It's a magic keys ASMR. It's your risk. Lose less. Oh man. Yeah, so some of y'all need to learn how to lose less. Not win more. Trust me, the wins will take care of themselves. It's setting up again for another accumulation break right here. So you got some kind of a resistance and you have support. Resistance, support. So it's the same idea for the first trade that we took right over here. As if for price to continue moving downwards. So respect to that area, continue to move down, 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 down. Now it's all the way down here. Now we're down 0.70%. You know, 0.70%. So it's taking like a small little break here before it continues to move bearish. It's going to accumulate and then it's going to break. That's going to try and move down again. But it's crazy that it's still moving down so much. It's not creating new higher highs. And you see, it's just a fake out. You see one higher high, which was formed right here. But see, it's just a fake out. Still setting pressure. So you'd want to see like some kind of higher highs being respected. Some kind of resistance is being respected. If you're expecting price to continue moving up bullish. It faked me out good on there. Oh, it faked you out good there. Why'd you buy up so high though? Oh, he's trying to get some kind of a breakout to the upside. Is it worth it to buy it? I mean, the reason I bought it was to trick my psychology. That's all. It was just to trick my psychology to at least get that managing risk thing started in my head, you know? But you don't really need it. You could probably get the on-screen version as well. Let's see if it gives a strong push below these lows. This is by a 36.62. You got faked out too. Left hand side was looking good. This is a time when you seriously gotta question a counter trend move. Yeah, I know, like maybe left hand side was looking good. Maybe you're gonna look at this and think this is a fake out down over here, that price can continue moving up bullish. But you know, there's times when you gotta know when not to trade. It's not always about taking the setup just because it's there. But if you see that the market is moving like very strong in one direction, that's a time for you to ignore your signal that's telling you to do the opposite. You know, because there's a higher chance you're gonna get faked out. Man, there are days like this where price is also just moving up. And I know like any sort of accumulation breaks, those are probably short-lived. Short-lived, you want to be very quick on the management. If it continues moving down, you want to secure something quickly before it starts reversing, because typically that becomes a fake out. Just the same way like this is becoming a fake out here. And the only way you're going to know this is when you start to look at the momentum in the market and how price is moving down. You see, like, I think we're all on board today that we're bearish, though moving down. You see, we're only like looking at this section right here. So if you ask a 10-year-old or someone like that, like what direction this line is going, they're going to say it's going down, right? Because you're not overcomplicating. Because you know, the thing is like, when you first learn, you're thinking the more you learn, the more profitable you can become. But what happens is the more you learn, the more confused you become sometimes. You know, because now you start to draw like certain zones, like all the way over here, God knows when. And you start making reasons to why price should reject those zones. You know, write a 1 if we've all done that. Write a 1 in the chat if you've done that before. Its price is moving down. You know it's moving down, but now you're looking left to find a reason that it shouldn't move down anymore. And you know it's moving down heavily, but you're just trying to catch the bottoms. So you're going to do a lot of this. You know, so... simple. Keep it simple. Keep it simple. That's why I call it like also beginner's luck. You know, we all go to the casino the first time. Everybody in casino first time, we get lucky playing blackjack, playing roulette. We get so lucky, we make a lot of money, right? And then we want to come back and outsmart the market. We come back smarter next time. And that's that. Now we start giving it all back again. The good thing about my journey is I never got beginner's luck. I lost from the beginning. I'm never one to get the beginner's luck for some reason. Even at casino, I never got beginner's luck. So it's a good thing because it builds my character from the get-go. You know, some people get this amazing beginner's luck, man. They deposit like $500, they run that up like $2,000. And it's just something they think now they've done it once that they can keep doing it. That's how gambling addictions start. You know, they get a bit of that buzz and they feel like, man, if I've done it once, I can just keep doing this. And you fall into a trap, and before you know it, man, you've already spent so much money trying to replicate that, which is a lower probability that you can replicate that. And the thing is, like, when you do end up replicating it, you're just making back the money you've already lost trying to replicate it. So it's a never-ending cycle. I play reverse, so yeah, it can be hard. It feels good. It feels good to catch it. It's just the same way as when price comes down and you catch a move like this and it plays out so nicely. Like this feels really good. Like I would argue that this feels better when you catch a trade, because you know we still get zero drawdown trades as well, correct? Like look at the trade that I was explaining here as it was playing out. And you see how price just broke these lows and then continued to move down like this. Look at that, zero drawdown. But I would argue this doesn't feel as good, even though it's the same effect of zero drawdown. This feels a lot better. Because, you know, price just, you get like a John Wick over here. Price comes in and you scope it out. You scope it like this. It looks fucking amazing. Straight into profit. That feels so much better than this does. Because those are just like habits that we have. Most traders have this habit. Yes. So you got tall traders say yes. And I agree with you. It does feel better, eh? It does feel good. as long as you know what you're doing. That was our liquidity grab when we first came onto stream. The London opened, small liquidity grab above here. Then started ripping down. You can just tell it grabbed some orders, some potential buyers here thinking the London Open would continue pushing price upwards because it's London Open. It's a different session. And they just get trapped in here. See that the market is going to leave you booby traps. I mean, like little clues. So look, why did it break these highs and then come here and break these lows? It broke these lows and then it moved up again. So you see, it's not random. It's not fully random. Like, market is quite intentional. And once you understand that the market is intentional, you're going to start executing on your strategies with good probabilities of them playing out without hesitation. Because you know that the market shouldn't do that then if it doesn't want to move in that direction. You know, at the same time. So it's good to be able to trust your system. You know, don't second guess your system. Every trade just has probability of it being a winning trade and a losing trade. That's all that it is. But if you have enough sample sizing data and you see that if it breaks a certain direction, it should go in that direction, then you should just always do that. Because there's always a probability of a fake out happening as well. So what that's going to do is it's going to limit you from strategy hopping. Because that's where a lot of people get stuck, is strategy hopping. They're going to do something for some time. It's going to stop working. The strategy hop. Because you just don't have the sample sizing data yet to see what a normal cluster. And this is the keyword here that you have to look at when building a strategy. It's called clusters of good and bad trades. So, you know, like 25 trades is a good idea to get an idea of how that strategy would perform in the long run. Just to start, 25 trades without over trading, taking 1 or 3 trades a day. And then at the end of the month, you're going to see like your results. And then you can see what the clusters of losing trades look like and what the cluster of winning trades look like. And how far the push in general. And then now you can start navigating that a bit better to manage your risk and get yourself out of drawdown. But the key word is consistency. So you have to find a way to be super consistent. Can I access a copy of your journal? Yeah, you can download it. Download it in the description box or on Discord here, you know. Look at this. You got resistance, you got support. That break to the downside looks like it failed. Got a reversal confirmation. Reversal confirmation signal right there. Because the sellers will be coming in here, break up the lows, and then price consolidates. That's like a warning sign. It's telling you, like as a seller, that right now, I think the best thing to do is to manage your risk. Because all these other trades, they just played out beautifully. You know, the ones which went into profit, they just all played out beautifully. But once it starts to break and then consolidate like this, then you got to be careful. Because it's the same thing that happened here. Remember, but in this scenario, it didn't break the highs. It broke the lows and distributed to the downside. So our position was protected. But you see, in a situation like this, it broke the highs instead. So there's a higher probability, or the variables increase, that price can, let's say, trigger these highs. You know, then that's where your stop loss, your main stop loss would potentially have been. And now there's a higher chance that price can come up and take those highs out, so you can manage your risk. Because even if you look at this previous section over here, even though price came up, it still didn't take those highs. That was the main area right here. You see, so that's why it's quite important what direction it was going to break. Profit taking for bears coming. We would definitely need to start breaking above resistance and respecting 36.67. Profit taken for the buyers, sellers. Well, this paper trade. Paper trade this and learn to use 35% drawdown. Hit already. Isn't it too small, Vic? Can I know why 35%? Wait, you get a paper trade counter move. Because 35%, because look what happened. What happened to this trade? Would you have rather preferred all the way down here? You see, you manage your risk because price is coming down. Because you see, the moment it starts to come down like this, there's a higher chance that this becomes like a losing trade. Especially because you're counter trending. So yeah, I think 35%, it just gives you enough room because it's a bigger stop loss. Correct? It's a bigger stop loss. Because if I take this off a smaller entry, like sometimes my stops are like 16 pips max. If I take like 16 pip max stop loss, even that 16 pips itself shouldn't be hitting. You know, it should be respected. So if I got a wider stop loss like this, I use 35%. And it's closer to what my original stop loss size would typically be, like 16 pips. But at least I can manage my risk and keep the profits that I made from previously. And still be in a position to cash that trade. Because you see, like, price can keep moving further than you think. Right? Like, look at yesterday's trade. Yesterday's trade, it moved a lot further than we thought. You know, it still kept moving up. So at least you got stuck in and you're like in a risk-free position. This is a young wolf. And of course, your good trades are not going to come even down this far. Like if it's breaking these highs, then it has no business at the same time coming back inside this range. I sleep 6 hours before stream. Nice and rested for the day. Let's go. Gold. This is the, if you look at the time as well, this is like the 5 a.m. hourly candlestick, which is also supposed to be just consolidating here. There's a 5 a.m. hourly candle is about open in the next 4 minutes, 50 seconds. So we could start to see a little bit more support being formed. Get those retracement. I think if we're going to get a retracement, most likely pre-New York. Pre-NY. Because every session kind of can give you a different direction. You know, if we're moving down like Asia, pre-London, London, there's a strong probability that pre-NY NY session can now give us a retracement. Like this. Maybe then the daily candlestick can start moving up. And right now we're broken into a consolidation. This was wild though. Like this morning when I saw price move up like this, I was kind of expecting to come onto the charts and see gold already up like 0.40% on the daily. But I think price at this point was down 0.20%. It's like, okay, you know, this is not typical fashion of gold if we're going to be trending on that daily bullish. We should have already been moving up. So I was looking at this and I was thinking to myself, this is probably a big whip that happened, you know? Like, look at the size of this candle. You see, this creates like an imbalance in the market when you have a candle size this big. So this was part of the confluence for why I took a sell over here this morning. I'm like, okay, you know, got a nice little consolidation breakout over there. And at the same time, you had this range for potential runner below here. And that range was worth about like 26 pips. Volume is decreasing? Yes. Yeah, volume, I don't know. We should gotta wait and see here because it should be decreasing. It's consolidating. It's still moving down. You know, it's still moving down. This is just an accumulation. So it's again, it's like a bus stop. Right? It's accumulating orders. It could be waiting for the new hourly open here. New hourly candlestick to open, create a top wick, and then continue pushing down. But we gotta wait and see, because that 5 a.m. candle usually doesn't have follow-throughs, generally speaking. Of late, we've been seeing kind of a small volume come in, but generally, it should just consolidate. It should consolidate. So much accumulation here. So much orders that need to be distributed. Because you know what they say? They say the bigger the accumulation, the bigger the breakout. This is what they say. The bigger accumulation, the bigger the breakout. Which is true and false. Just like much of concepts in the market, it's very paradoxical. There's a lot of truth and falseness to a lot of things in trading. So it's like all about getting comfortable with the uncertainty. But you see this? Massive accumulation right over here. Huge breakout. This was on the daily time frame. The bigger consolidation, the bigger the breakout. But I have seen massive moves happen from tiny accumulations. Just like the one that we saw here today. For example, you still get these huge moves come out from such small areas. Nice little accumulation here as well. That was a breakout as well this morning. If anybody caught that. That happened at a 1:01 a.m. Eastern. Such a nice follow through here. We took the sell at 1:20 a.m. So I was on the charts for maybe like 20 minutes. And then today we took a sell here at 3:16 a.m. So I was on the charts technically from the time I really start, like we were on the chart for 16 minutes for London. See, gold slips but holds close to all-time highs ahead of Fed rate decision. U.S. central bank cut rates by 25 basis points, though attention will focus on Fed Powell's remarks for Qs on the pace of future monetary easing. Markets have priced a deep easing path, leaving them vulnerable to disappointment if Fed underdelivers. A deep easing path. Okay, let's see. Meanwhile, retail sales rose for a third straight month in August, revealing healthy levels of spending despite concerns about lingering inflation and a weakening job market. It's true. I mean, if you think about yourself as a big investor, let's say you got millions and millions of dollars in the market, you wouldn't want to be holding throughout the actual FOMC just in case Powell underdelivers, correct? And if you're trading already at that level, you'd have already been getting in sooner. Like, I know this already. This would have been already very obvious for you if you're trading at such a high level like this. So you'd have been getting in as soon as Powell started speaking there, like when he gave us the remarks that he did, which made everybody think that we're getting rate cuts past Friday 22nd. Literally everybody was thinking that rate cuts are 100% guaranteed now. You know, so you'd have already been coming in, and you'd have already like secured some partial over here, like a good partial amount, as you wait to see what Powell says next. And then, you know, the thing is, you can always re-enter. You can always re-enter the market once it starts to show you the direction. That's why I say you never really miss a move in trading. A lot of people think like, oh, you know, I missed the sells today. The sells already played out. But you never really miss a move. So, man, once you get comfortable with that idea that you never miss a move, that's where you get your patience. That's where you get the strength to be patient. FOMC, not another 9 hours. Got plenty of time. Yeah, exactly. Got so much time. But that's also like a double-edged sword because we have so much time. And when is price going to start ranging? You know, when is it going to start ranging heavily? Right now, everything looks good though. It's wicking quite a bit here as the new 5 a.m. Eastern hourly candlestick just opened. This is the one that kind of loses some volume. Sometimes it has a bit of volatility, but it doesn't go anywhere. And we can see it's starting to range, starting to wick. So we got the John Wicks in here now. Got John Wicks in the chat. So this is perfect for you now to start looking for your John Wick entries.
We don't do that here.
So much time. I'm doing a challenge, mate. Oh, nice. Yeah, you gotta take your time with that challenge. Don't put it too much on a pedestal. You know, you got a challenge on a pedestal, you kind of like get nervous and you make the wrong decision. You know, whenever you're nervous, there's actually research that says most reported crimes are reported falsely. Because when you're in the middle of a situation that's a high stress situation, the brain doesn't get that information correctly. So afterwards, when you're giving your recounts, when the cops are telling you, was it this guy, was it this guy? You know, like you went through so much that most of those recollections, they got really bad recall. You know, human mind has very bad recall. Memory is not that good, especially in situations where we're like highly pressured. So yeah, a lot of those cases are showing like negative results. So it's the same thing that happens with trading a challenge. You put it on a pedestal and you can't think clearly. You know, it's the same way as if you have like a very strong bias in the market and you can't be flexible enough to change your bias. So you eventually make up the wrong decision. And what happens in those cases, even if they pick the wrong person, they've already committed to that decision. So even the ego gets in the way. So even though they kind of know they're wrong, they're not going to change their story because they're already too far into it. And the ego comes in. So I think like human psychology, man, if anybody's studying psychology here in school or just in general or works with psychology, then I think you're in a very good position to reflect a lot. And I think that's what trading is all about. It's about reflecting. Because if you can't reflect and if you can't adapt, then you get stuck in these phases where you're losing and doing the same thing over and over and over again without trying to change something small each time to see what can I improve. Will you trade FOMC? Oh no, I got some popcorns ready. I'm gonna eat some popcorn and we'll watch. I'm gonna watch FOMC today. Wait, there's a video over here where we're eating popcorns also. This is how I'm going to trade the FOMC. See, I'm gonna get popcorns like this and then just gonna watch. Then I'm gonna watch people blow their accounts on FOMC because you don't miss the move. You know, you can come back the next day and still catch that same FOMC. It will be the same FOMC because, you know, the thing with the FOMC is that is not just a one-day event. That volume is gonna carry over through Q4. Because, you know, we're going to have one rate cut. Then we're going to have another rate cut. That volume we're going to experience through Q4. So what typically happens on these days is that I just get the direction. I get the direction. And then when I come in for pre-London, it becomes quite obvious, you know. Then you're going to see maybe pre-London's going to be heading up still. Still heading up. We're going to be up like 0.40, 50%. I'm like, okay, let me take a buy. And maybe I can even hold the trade longer. Simple. You don't miss a move. FOMO is all made up in your head. FOMO doesn't exist. That's just something you made up. Oh, I'm going to miss FOMC. Oh, I'm going to miss this. But once you understand like how markets actually move, yeah, it's a lot easier for you to deal with FOMO and a lot of those problems that we have. So it's going to be awesome, guys. It's going to be super awesome. Q4, so much opportunity in Q4. It's not just today. So much opportunity. So this is the best time to learn how to trade. This is the best time to learn about momentum and direction. So if you're still struggling with like daily bias and that sort of thing, this is the best time to learn about that. Because it's going to be a little bit much more easier for you to get a grasp on direction when markets are moving. It's much harder to learn about volume and direction and bias when markets are ranging like this, you know, when there's no volume and you get kind of confused sometimes. It was a lot more difficult to understand like bias, because like everything is kind of like short-lived decisions. You see? So right now, man, it's gonna be awesome. You see how easy it is? Especially look at that. Especially once you start breaking out. See how like prices and distribution, it's much easier for you to also get these moves off the LTF. Because look at this. Look how candlesticks are just moving. I'm done now until after news as 1% up on challenge and personal. Saving my bullet for until 10 a.m. Nice. Am I still planning on taking a trade today? Yes. Yeah, I kind of want to take a trade today. You see the direction is going to shift. Maybe it might even be a buy now. Because all day I've just been like hitting sell. So maybe now it might even be a buy. Because we're getting close to pre-New York. But we have to see what happens from this point. Because remember again, this is a point A. So the next move is coming out of the zone. It is going to be like a buy or a sell. So we're going to get like some kind of a directional... Or we're going to get like some more data and then see what price wants to do. Because the thing is, if it breaks above here, for example, and still doesn't continue moving up and then comes back into this range, then that gives me enough data to say that, okay, you know, price can continue to go down bearish. Maybe we continue to move down bearish. But if we can break above these highs and respect these highs, then I can say, okay, you know, maybe these buys now could work out. And we can continue moving up bullish up until New York. But if it breaks about this resistance, there's some kind of a clean range here. Like 25 pips up towards 3670. Mr. Wolf, Jukebox, thank you for the sub. Hello, I want to trade in real. Do it. Remember, drink more water, chat. Drink more water. Man, drinking water, super important. Super, especially if you're on the charts for a long time. Yesterday I was doing some accounting and I hadn't drank water in such a long time that my brain couldn't even think anymore. Like I couldn't get past like a certain point. That looks like a whiskey and a water. There it is, a whiskey glass. Although I don't drink whiskey. I actually hate whiskey. Like brown Yeah, those types of drinks, I don't like them. Glenfiddich. You know, like Glen, I got a buddy who's like really loves Glen. He was giving me a small rundown of Glen. You know, there are different types of Glen. There's Glenfiddich and then there's Glen something. They're like different types of Glens and different years. Just give me like a rundown of this. Need to do accounting today, avoiding it, but need to get done today. Yeah, right now it's like I'm kind of building myself a good system on Notion because I don't like Excel sheets. They're kind of like outdated, or at least I feel like they're outdated. Although people do use them, they're quite professional, but I kind of like something more gamified. So I've been doing accounting on Notion and kind of building like systems. So I can see like drawdown. I'm building a system where I can see drawdown on my account and I can see like from a percentage basis how far I am from my goals that I want to achieve. And yeah, it's coming along pretty nice. Because you need to make it fun, you know? If it's not fun, you're not going to do it. And like important things in life, if you can gamify it, you make it fun, then you're going to do it. Doesn't have to be boring. Yeah, it's on breakout here. That's why I said like we might be getting a shift in direction here soon, but we gotta see if this is a genuine break to continue moving up. Make trading a game? Yes, sir. Trading is already a game. The way I look at this, it's like gamified in my head. Everything is already a game. Because it just does the same things over and over again, but you just gotta wait. You just gotta wait and select the trades that you wanna genuinely take. You know, because if you take a trade that you're not 100% confident in, you're gonna most likely mismanage that trade. Mic is cutting out, really? Here's my mic. This is my mic cutting out here, guys. Just let me know on Zoom, on YouTube. Is the mic cutting out? No, it isn't. Not for me. You're all good. Oh, okay. Okay, awesome. Sometimes I know it does like a little mini cut out. Like it's very small, but you probably don't notice it. It rarely happens as well. Sometimes it happens like for just a little milliseconds, but you know, you don't notice it. Bro, where did you get your mindset? Hey, bro, like you lose so much in life that you have to develop that mindset. That's a survival coping mechanism. That's what that mindset is. Because, you know, to achieve something, there's so much loss and success is only this small. So if you don't already have a coping mechanism, then, you know, it's not a good thing. It's like you're going to struggle a lot. So it all started when I used to lose so much back-to-back in trading. That's when my mindset actually came. Because before that, I didn't have that mindset before trading. But you know, in such an environment like this, when you're pushed every day to be there, it's like you need to find a way that you can survive that environment. And then you slowly kind of like, it shapes you into that kind of character. You ever had like these jokes about traders who become super stoic that even in their personal lives they don't share much emotion anymore? It's kind of like a similar thing. Like trading shapes you into a certain person. You become really stoic towards experiences because you're kind of expecting the worst, you know. And that's the thing, when you take a trade, you're kind of always expecting the worst. You're not expecting the best, you're expecting to lose, you know. And I think that's where that comes from. So that way you know, you're much more capable of managing risk, being flexible. Because, you know, if you're not flexible like a ruler, you're gonna break. Correct? So some people, when you bend them like this, they focus, and some people, they break. It's like when you're doing like stretches, you know, as well. Like if you're doing these stretches, like yoga stretches, best example. Some yoga stretches maybe are so painful that you just have to focus. You put all your energy into not the pain, but you just find a little spot in there where you can sit there and you can get through it. You know, but some people, they can't find it, so then what happens? They break, they fold, and they fall down. Losing really strikes fear into a person. Fear makes you hesitate, and over time, being hesitant pays off to a point. Yeah, that you no longer feel fear. Yeah, you no longer, or I would say like your relationship to fear changes. You know, because sometimes you still get fearful, but what changes is your ability to remain composed during that fear. And you can get most of the time like 90% hit rate. So whenever I look at mindset and trading, every month is an opportunity for you to measure your how good of a trader you've been in terms of following your rules. So for example, this month, let me see. I feel like I did some dumb shit this month. Yeah, I still managed my risk. I did a few dumb shit mistakes. So my mindset was maybe like 90% this month. Because I can recall. You see, it's much easier for you to recall when you start journaling. I remember this day I took really bad trades, but I still managed my risk. You know, look at this. I lost 0.47% on one trade. The next trade I lost 0.50%. And then the next trade I lost 1.11%. So I still managed my trade, but where I went wrong was I was taking trades that I shouldn't have been taking. But in the end, it all came down to like 2.08% ballpark. You know what I mean? So like every month, man, every trade you take should always have a memory in your mind, at least for that month. You know, but if you're taking too many of them, like how can you keep track of your performance mentally? It's not just about performance if you're winning or losing. That's why I say you can never judge a trader by how much money they make, but by how they lose. Because you're going to see a trader maybe made $100,000, but maybe he was risking 20 or 30% to make that 100K. You know, so that in my books, that's still a loss. Because it's only about time that the market will humble you with back-to-back losses that blow the account. And that happens to everybody, chat. Like, there's no one who gets away with it. Another range here. This one's been filled up. So we just filled up this range. Price has pushed up. Obviously, here comes a picture from Ricardo. Let's see what this is. This little cell over here is sniper cell. Sniper cell at the top of the range. Oh, did you get that that thing you mentioned last time? Something with a wick at the top of the ranges. Sniper exit. Yeah, see? So we got like a cell over here, and there's another range that's been formed from here to here. So you have, let's see, how many pips? Got about 33 pips. 33 pips above 36.71. Nice. Accumulation, breakout. See, now the tides are turning. The tides are turning. It's like the ocean, you know? Ocean at a different time. Maybe you go in the morning, it's like low tide. And then you go in the late afternoon, and then you see the tides coming in again. You see the waves are starting to build up. So that's how you can think about sessions. And that's why I said this 5 a.m. candle, it's a very interesting one. Because that's typically when we're expecting the tide to kind of change slightly towards pre-New York NY Open. But it's still like it's definitely a key hourly candle that is, especially when price has already been moving down. Because you see, the problem is people might be still looking for sells. Because if you don't understand this concept, then what's going to happen? You won't understand the time that you're trading, what to expect. So if you trade like New York session, New York behaves differently from how you've been seeing London and pre-London Asia session behave. There's always a difference. So even if you're moving down, then New York session, you can't ignore the overall direction price might still be heading. Because NY is good for having that daily candlestick close like the way it closes. Because you can have a daily be bearish, and then it's a New York session which reflips it, and then it closes bullish, especially in an environment where price is already moving up. So that's the kind of edge you can give yourself by understanding the way your sessions operate. Yeah, it's 5 a.m. Eastern. Because, man, sometimes all you got to do is know how those candlesticks behave at that time. Like, those are time where we're just getting buys here, solely even based off the time than just a setup. We would wait for, like, a good-looking setup, but you're really relying on the time to behave in that direction that it behaves. It's a nice little edge you can give yourself. Pull the trigger at 36.64. Now, if wants to move strong up, need to accumulate a bit on this zone, we get probably move up. Yeah, now it's at least proving to us that some kind of a different PA we can get. But now it's got to get through 36.71. Yeah, look at that. Profit taking. So this is a point A here to point B. Price moved from here to here. Simple, right? I think that's such a simple concept to understand. Is how support and resistance works. Support resistance, we cover this so many times, from point A to point B. That's why when you hit like a level of support like this, you're kind of thinking to yourself, like, if it continues to move through it, that's like a bonus, because the market's telling you it can only move from here to here. On an entry, like this is like a swing entry model with a stop loss in the range. So that's it. That's fulfilled. Basically the same exact thing again that happened this morning's trade. You see price move from point A down to point B. And then there's a probability that price is going to reject those zones and then come back up, and price did come back up. Hey Frankie, good morning, good morning. 3700 futures chart bounce. Hello Raj. You see, so now if it gets through this resistance by 36.71, you got a range here. Remember, 33 pips. So it can move potentially from this point all the way up over here to this area. So that's your next green zone. Now this becomes like a no trade zone. Long? Yeah, I think the longs might be coming in. So you got a nice little distribution from this area over here. There's like some kind of small accumulation that happened down here, and then that's all distribution. This is distribution. This is what you want to see. This is what pays you. That's why I say, like, you remember 35%, Derek? That's why we talk about 35%. Because you see, these are the trades that just flow so much nicer. Look at this. They didn't even come down again, give you drawdown. So you see, when you took this buy here, it's a good thing that you manage your risk on this trade. You see? Because that's not how good trades look. That's not how good trades look. See, it came down, and you compare to this, huge difference. So why not save some of that money and manage your risk? You know, it's just an option. It's just an option. Big news today, bro. Yes, sir. We got some serious news coming in. Setting up potential accumulation break there too right now. All it is are just options. You want to give yourself options to manage your trades. Because if you don't even have an option, what happens is you're going to mismanage a lot of the time. If you're getting into a trade without knowing what options you have to manage that trade. Then in that moment, if you see one candlestick go against you, then you can easily mismanage the position. Yo, GJ is coming back down. Man, back down here to under 200. GJ also looks like it's about to break out here, guys. It's down like 0.06%. It's about to break out of the zone. Look at that. Got support. Accumulation. Getting ready for a break. GJ is definitely less volatile than gold, but you can still see that play out. A bunch of rejection wicks. Man, Gbpjpy is overall garbage. Just flirting with this 200 level. But yeah, we're back down below 200. This thing, I still think it has a higher probability to come down. Even if you look at the daily still has some nice clean range here. This has been accumulating, waiting, getting ready for the break. Oh, that's the worst feeling when you try and crack your neck, but you don't get the crack. It's also a bad habit that I have. Don't know where that habit came from, but it's something that I tend to do a bit. Usually comes when I'm on stream though. Maybe the stream's making me nervous. Gold is doing that accumulation. Let's see. Yeah, pretty nice accumulation here. Now 1 minute's looking quite nice. Just needs to break either below these lows or above those highs. Is there anything else? Let's go on our currency strength meter and see what's crack-a-lacking. So we got US dollar here. It's strong. It's strong. Actually, yeah, it's strong. It's pretty strong. It's above neutral. So gold moving down also makes sense. Pound says it's strong, but you know, pound is moving down. But because also the yen is strong right over here. Was it AUD's dead, CAD dead, Swiss franc, euro. I guess that's the most important one right here, the US dollar strength. Let's see Federal Reserves if they change anything. You got about 8 hours, 29 minutes until the FOMC meeting. Should still say 100% though. Yeah, still 100%. Nothing changed. Nothing has changed. So this is pretty nice. Nothing has changed. Will gold move up for the FOMC statement today? Got in 3606. We'll ride all the way to the moon. Oh, you got the devil's number. 666. Let's see. Okay, so we got Grim Gensler. While Papa Elon suggests a popular support for gold, Grim Gensler warns against overconfidence in uncertain waters. Knight of Stonks urges you to trust your instincts. Gold may rise today, but tread carefully. Oh, nice. So we got a confirmation there. Gold may rise today. And let's give it the good old gulag flip over here. So let's flip this coin. Heads is buys, tails is sells. Let's see. Is the universe aligned? Oh, nice. Yeah, it looks like it. Congrats, you win. So we got heads. We got heads here. So both Zoli and the coin flip say buys. Awesome. Maybe this is going to be the inception now. Because price was already a pretty nice discount. I think we saw like 0.65%. Pretty good discount in a sense, right? 0.65%. Let's see what happens. What's going on here? Oh, it's starting to break. Oh, what a shitty break this was. But it's starting to break now again properly. The first break was like a... Oh man, that looks a bit suspect. But, you know, because the first break, you know, this wick here was meant to get broken. Correct? This wick here was meant to get broken. But it didn't even break that wick. It literally broke the wick with only 0.5 pips. Which is barely anything. It just shows zero volume. But at the same time, when it did that, it created a new structure over here. It created a new support. So it kind of messed up the idea there a bit, to be honest. But it looks like it's still sort of playing out here. But you see, it didn't break the highs, still rebroke the lows. And you see how price, you see how these concepts operate back to back? Point A to point B. Accumulation, break. These are TFX concepts. This is how that I look at markets. You know, so for me, this makes the most sense. Point A, point B. Accumulation, breakout. Clean ranges. Swing entry models. There was another accumulation break that happened all the way down over there too. But that was within the range. Which was this overall range here. So you had accumulation within accumulation because the market's a fractal. So you're going to have accumulation within accumulation. And what I usually do in those situations is if I'm expecting, let's say, a price to move up, I'll just take the first one. I'll look for the first one so I can get in earlier. And then this would just be an additional confirmation that price can move in that direction. Simple. But you see, we got a way of navigating markets here. So when you can make sense of the market like this, like it's like the road that you're on and you got to stay on that road because everything else is just noise. You know, you can learn about pivot points, stochastic, MACD, all that is just noise. And that's going to confuse you from what you actually need to be doing. Did you mean gold will go up today? Yes, that's kind of what we're expecting. We're expecting gold to go up. So we just have to wait and see. Because remember, we spoke about already how smart money would have already pricing these interest rate decisions, correct? Like when price was already moving up like this. This is where most retail traders get caught in whiplash. Because, you know, what can happen is gold can still move up. Maybe it moves down today and then moves up tomorrow. But what we're expecting is that price goes up. But, you know, it's funny because we're on the charts here and price is down. It's complete opposite to what we thought it would be. What is this? Behold, will gold move up or down today? What does yours say? Lastly, the Queen of Futures emphasizes a determined pursuit of gains, casting a shimmering light upon the potential for upward movement. Oh, nice. Today, yes. The winds favor an increase. Let's go, Goldie.
Why are you running? Why are you running?
You got the Knight of Crypto. You are working methodically towards your gains. You have a plan in place and are sticking to your schedule to get the money in. You may not make it quickly, but you get results. Nice. Yeah, that's a trick to life. You get the results you want, keep working. So that's how it works. You gotta have like keep working here. So you gotta keep working. So it works like this. You get the results you want. Awesome. You don't get the results you want. Awesome. And you got to keep working. Just keep working. You get it? Nice. If you don't get it, maybe not the best example if it just goes in this one direction all the time. But you know what I mean, chat. You know what I mean. You just got to keep showing up. You got to keep putting in the work. Don't let bad days keep you down. You know, bad days are your best days because those are the days where your character gets built. Character is never built on the easy days. You know, majority of characters are always built on the most difficult situations. That's when you level up. That's when you truly level up. So you gotta look at every single opportunity as a opportunity to level up. You know, like they say, what does it say? two L's make a W. Two L's make a W, right? Can you see right here? That's one L. That's another L. Two L's make a W. So, you know, you gotta just change your mindset towards certain things. You gotta trick your brain. Tetra, I saw live streaming to around 100 to 300 viewers. How can I handle pressure if I hit SL? The whole world flips on me. Oh, I don't know. Just, you know, just don't care. Just don't care. Like, you know, you only know the progress that you make. You know, the whole world, they only see like a small bit of it. Correct? So you just gotta focus on you, man. You gotta focus, stay on your lane and just do what you do. Because, you know, the problem is you cannot please everybody. There's no trade that you're ever going to take that 100% is going to follow your analysis. There's always a reason why someone thinks they should do the opposite, correct? So there's a no-win. It's a lose-lose situation if you care what people think. You just have to focus on what you're doing. And, you know, hopefully you're going in the right direction. You're moving with integrity. And you can't go wrong. Like, just keep doing you. That's all I'll say. And hopefully you're quite reflective as well on certain things, and that's it. Take the damn trade. Who gives a shit? You know, look at how many trades I've already taken this month. So if I take the next trade and I put too much effort into thinking what other people think, man, imagine how your whole trading career is gonna be. Like this whole year, imagine how many of these trades we've taken and what that can do to your psychology. It makes you trade worse. You start breaking rules, correct? And then that gets to you. And eventually, you know what I've seen personally? I've seen people stop streaming altogether. I've seen people stream for a while, they try for a while, and then they just stop. Because they're not able to deal with that. You know, that like judgment. They're going to stop, they're going to take a break, and then maybe they're going to come back. I'm long. Yeah, this is like kind of a sell over here. It's doing a small reversal signal from this region. If it comes down and then breaks above, that will be like an accumulation reversal on the retrace. It's kind of making like a potential shotgun entry in there too. Because you have a support here and then you have a clean range again. Down here. So this is essentially just the same thing that happened here. That's happening here. You see, so the market mirrors itself. It's always mirroring itself. So when you keep your concept simple to understand, you kind of like see the same thing over and over again. So you see, I just flipped the scale here. And if from a buy perspective, it's just what happened here previously. So that would be the idea. And at least idea like this, you're also, man, that candle doesn't have a wick there on the, doesn't have a top wick. But yeah, the idea is good because you also like trading with the trend, which is currently bearish. Well, you see, this is the sort of range that price has gotten into. It's extended the range a bit for this hourly. Remember I said this hourly candle, I'm kind of expecting to consolidate. So you have about 18 minutes until this hourly candlestick closes. So essentially what it did, it just played a small little move here to here, but it just extended the range that it's trading in between. So from support to resistance, about like 95 pip range. So this could be the overall zone that we hold now up until pre-NY New York session. Then it moves from this general zone here. Because for gold, a small range like this is too small of a range to like it could, but like 56 pip range, man, a single candle can be like 56 pip to 56 pips. So this range is smaller. So that's how sometimes you can also anticipate the range is getting wider. Right, you trading funded real account? Real account, sir. F what others think A, do what gets you results. Worst case scenario, set King Woods and Prince Eli on them. Funded feels real to me. I'm looking at the exact same zones for buys and sells. Feels so good to have TFX confirmations. Yeah, this is the zone, because like if price moves up, you're kind of taking a trade based off of expecting volume to come in. But if price moves down, it makes more sense for price to move down. You're trading with a daily time frame. You got about 29 pips here below 26 triples 36.66 over there. But I wouldn't take that sell if you're superstitious. You know, you got like 666 over there. But you got a range here. It's pretty nice. But I guess ideally what you want to see is for this candle to break and close below the support. You know, there's about like 30 seconds in there. But yeah, I'm just kind of like sitting on my hands here. So you got 18 seconds and candle is still rejecting that support. So you gotta wait. You got 10 seconds. Can we close? I see a retrace on the FVG of the support. Oh, look at this. We rejected support here now. Candle has rejected support. It's breaking above. It could be, it's giving a warning sign to these sellers. You see the sellers over here. They shouldn't take this drawdown. This is a very risky thing. It's giving this a reversal confirmation. Because it's not about it coming down. It's about you controlling your risk. So for a trade to be like a really nice trade, it would never have been consolidating here like this. It would actually have already been off to the races because it had clean traffic on the left-hand side. So the moment it starts to do this, it's like you're just protecting yourself. You know, the most important thing you want to protect is your psychology and your account, right? So if this was to do something like this and then move down, it's okay because you approach it from a perspective of like anything could have happened at that point. Like price could have rejected and then continue going against you. Because you can only make your best decisions when they're happening. You can't make your best decisions in hindsight because everything is super obvious in hindsight. You know, but like if you're waiting for a candle here to close below 36.666, then at least you would have a liquidity grab confluence as that candlestick breaks above that area. And then for candle here to reflip and then close below that support. Then you're like, okay, nice. It looks pretty good at that point. Then you can take a sell here. Alright, check you later, Ellie. Did you find when you have a viewer watching you trade and explaining to them, it saves you a lot of mistakes? Since I've been showing my bro you've won 5 trades and lost 1, avoiding a lot of losers. Yeah, I think so. I think, you know, like you gotta trade like someone's watching you, then it's like easier to it feels easier to follow your rules. Because I think the reality about trading is you're gonna get away with a lot of bad habits because nobody's gonna tell you not to do those things. So actually, you actually mentioned like Woods. You should watch the recent Joe Rogan podcast now with Matthew McConaughey. So Matthew McConaughey touches on this as well, about like how he looks around at society and he feels kind of like depressed of some kind of a sort, like the fact that people do things that they can get away with doing those things. So he was thinking about like changing his perspective to being a bit more honest, you know, and not doing things just because, you know, he can get away with doing those things. Check it out, it's pretty nice, I think. Still haven't watched the Charlie Sheen one. I think I'm just not finding time to watch the full podcast. But Matthew McConaughey, man, that's another legend. All right. You know that line he improvised? That line was from a movie. He was not even meant to have a role in that movie. The director was like, do you want to be in this scene? And he had like, you know, he had one scene where he was in a car and he was thinking to himself, what would my character do? You know, my character, okay, let's say he likes to smoke weed and he likes chicks. Then he was like, all right. Man's a legend. Still long? How many views does it have right now? $1.2 million. Nice. Charlie Sheen still got one of the higher ones, 3.8. Yeah, that's definitely one of the higher ones in a while for Joe. 3.8. Matthew McConaughey is gonna bring at least 2 million, I think. The dude from Inception. Isn't that the guy from Inception? You know, cool thing about him, that was not his first space movie. He did another space movie when he was really young. I think it's called Signal, if I'm not mistaken. Matthew. Well, not really. He was not really in space, but he was like, it's a kind of like a space-oriented movie. Signal. Forgot what it's called. Yeah, it's called Contact. It's a super old movie. It's called Contact. I think that's just a scene. They got some pretty good actors in here too. They got this guy. Forgot his name. They got the boy right here. He kind of looks like a young Johnny Depp in this scene. Oh yeah, sorry. Did I say Inception? I meant Interstellar. Isn't that the guy from Interstellar? Not Inception, my bad. All right, chat. I think I'm gonna head off here, guys. Enjoy the rest of your day. FOMC today. Remember, FOMO doesn't exist. The market will give you direction today. You'll still be able to cash the move tomorrow. So I'll see y'all for London Open tomorrow. There's still sell ideas below support right over here. Got 28 pips, and you got buy idea above here resistance. You got about 32 pips. 32 pips, and then this kind of like a no trade zone. It's kind of like a no trade zone area over here. So I'll see y'all in the next one. Adios.